Hello. Welcome to my channel, my dear friends. My name is Avilas and I'm a trader next to. In this video, I'll be analyzing the chart of USD JPY, US dollar Japanese yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis and do check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro, USD, GBP, USD, Gold, USD, and many more. So let's get started. So this is the weekly chart. Yes, weekly chart of USD JPY, and we can see that market is extremely bullish on the weekly chart as well. Right now, USD JPY is facing some kind of selling. I won't say the selling also retracement. Okay, retracement or correction. Okay, because we have a resistance on the weekly chart. You can see that we have a resistance here. So as a result, there is some kind of correction going on in the USD JPY. But that does not mean that there is a trend reversal. Yes, there is a big difference, huge difference between correction, retracement, and a trend reversal. Okay, so whatever is going on in the chart of USD JPY, that falls under correction or retracement. Keep in mind. Okay, and still the chart is very bullish. And as we all know, market has only one rule, and that is follow the trend. So if you consider the trend of the market, then it should be buy. Clear? Okay. Now let's get back to our beloved 4 hours time frame. In the 4 hours time frame, you can see that I have made a bullish flag here. Okay. So it is a clear bullish flag, and there is a possibility, yes, there is a possibility of market breaking the flag and going up. Resistance and support are not permanent, so at one point of time market usually breaks those levels. For example, USD JPY 109.75 was acting as resistance for 2 months. Then it became the support for 3 months. And right now it is 16.50 level. Okay, so no support and resistance is permanent. At one point of time, market breaks it. So there is a possibility of market breaking the level as well. So on the 4 hour chart, you can see I have made a bullish flag pattern. You can also make a flag like this. And as I said, there is a possibility of market breaking the flag, this line at the top and going up. Because though there is a correction, you can see that there is constant price rejection from below, which clearly signifies that buyers are also present in the market, and buyers are still present in the market. They are very bullish and they still want to take the market up. So trading opportunity number one, first trading opportunity is if market breaks the flag and starts going up, you can take a buy. Clear? You can take a buy if market starts going up, breaking the flag. The second trading opportunity is if market fails to break the flag, starts coming down, then there is a possibility of market taking support at 115.50. If market comes down to a level of 115.50 and market bounces, you can take a buy as well. Keep in mind, confirmation is important because we cannot be sure about the support and resistance level. What is the confirmation? If market forms a hammer pattern, or if you see a bullish pin bar or bearish engulfing pattern at 115.50, then you'll get the confirmation that yes, previous resistance has become the new support and you can go for buy. Clear? So these two are the trading opportunities. If market breaks the flag, starts going up, you can take a buy. And on the other hand, if market fails to break the flag and starts coming down, you can get another buying opportunity at 115.50 level. And if I try to draw Fibonacci pattern, Fibonacci retracement, and you can see the Fibonacci retracement is also pointing towards the 115.50 level only. So as of now, let's keep our eyes on these two levels. Okay, and in case something big happens or something weird happens in the market, I'll be coming down obviously tomorrow and I'll discuss with you. Keep in mind, this is the currency strength meter. Yes, just look at JPY, Japanese yen. Japanese yen is the strongest currency for the day. So there is a possibility of some kind of correction in the JPY pairs, because whenever JPY goes up, okay, we see USD JPY, GBP JPY, all the JPY pairs going down, some correction. Okay, so let's be careful as well. And if I take you to the Forex sentiment meter, you can see as usual retail traders are on the sell side. always on the opposite side of the trend of the market. So my dear friends, please do not make the mistake. Only trade with the trend of the market, and please take trades with proper analysis. Okay, and whatever you do, please follow proper risk management, because see, this is my analysis. I can be wrong as well. For my analysis, my wrong analysis, you should not be losing your capital, 50% of your capital, 40% of your capital. Do not risk more than 2 to 3% of your capital. That is the best way to trade. Okay, bye bye, take care, see you tomorrow.